Stream. Try it one more time, Errol.
Now
Okay,
it is.
we're live now. Thank you very much. Okay, it's 1:30, so I'm going to go ahead and call this finance meeting to order. And I'm going to do a roll call vote. Let's see, Linda Davis.
Here.
Okay. Carol Dackman.
Here.
Antoine Stevens.
Here.
Okay. Patricia Yeager. Patricia. Well, we know she's been having some technical difficulties, so she's probably going to join us later on. Okay. Now, the agenda, do we have any amendments to the agenda? Okay, hearing none. I need a motion to adopt the agenda.
I move to adopt the agenda.
Thank you. Got a second on that?
Second.
Second by Linda. Okay. All in favor, just say yay.
Aye.
Okay.
Okay, all right. Motion carried. Okay. Okay, Chris, we are down to the next item there. The minutes of the previous meetings.
Yes, sir. I'll pull those up.
Okay.
Yeah, our last meeting was in February. So if anybody can remember, y'all's memory is probably better, but this was the last meeting we actually had. It was back on February 27th. So.
Yes, and it was in board docs. I need a motion to approve the minutes.
I move to approve the minutes from February 27th.
Thank you.
Second.
Got a second on that?
I think
Second.
Mr. Stevens just did.
Okay, second. Okay. All in favor, say aye.
Aye.
Okay.
Aye.
Okay, thank you very much. Okay, so we are down to the Chief Financial Officer's report, and I'm going to turn it over to you, Chris.
Okay, thanks, Mr. Worthy. I'm gonna pull up the May financial reports. And I think I mentioned this in a board meeting. I appreciate Byron redoing these reports. I think they're much cleaner and easier to read. They're all on one PDF now, so we're not, it's a much cleaner format. So I do appreciate Byron's work on getting this, reformatted. It was his idea, I think, right after the break. He said he was playing around with it one day, and he sent it to me. And I said, "It looks great." So yeah, but anything y'all ever want to change on this, let us know. But I just think this is a much cleaner format. On the balance sheet, top two lines are our cash and investments. You can see that we were on 49.7 million at the end of May. Continuing to trend down, which we knew was going to happen. Based on the budget that was approved last night, we anticipate fund balance being around 32 million at the end of May. The biggest thing is Greg Davis actually mentioned this in a board meeting. Like our salaries for, our teachers start getting paid on the new fiscal year in September. So they actually run through August. So we have to accrue July and August payroll amounts into the prior fiscal year. So that's why you see right now we're at a fund balance of about 49.8 million. Well, why will it go down to 32? That's why, because we still have June, July, and August technically payroll that will affect the prior fiscal year. So that's why that number will go down so much in the next 3 months. And at the end of August, well, normally around the middle of September, we'll have a good feel for where the year ended up, because we have to get those payrolls entered in. So actually, that's why I think we normally skip presenting the financials for June until about the middle of September, because we really don't have a true June financial statement until then because of those accruals or those salaries. So anyhow, looking at that, cash position's good, fund balance I talked about. Go to the statement of revenues, which is page 2 of the PDF. Everything looks positive. We've almost collected 100% of our budgeted property taxes. We'll go probably a little bit over 100%. No negative trends there. When we get to the cash flow, we'll look at it. Of course, transportation fees, we had at 400,000. Of course, we're not going to hit 400,000. We're going to be probably around 225, but we have other stuff that's offset that throughout the year. Transportation fees is where we bill for field trips for the schools for that portion and some other items and of course, we didn't have school since March. So we knew that number was going to be down. So no trends on here that's the only one I really wanted to point out is going to be less than what we budgeted. So everything else should be pretty much in line there. Comparing to where we're at last year, we're right. We were at 89.1% collected last year. We're at 89.26%. So, I mean, we're right in line. Revenues by source, we're looking at that 60-40 mix, which I think was pretty close where we ended up in next year's budget as well. That's something to keep in mind with and that number will kind of hover around there with the cuts that we've, are getting from the state right now. And Mr. Worthy's pointed out many times, that's supposed to be closer to a 50-50 split. One thing we are fortunate with the local piece, we do have a tax digest that continues to grow. So that's something, we'll definitely keep our eyes on. But as long as that digest keeps growing, that the local piece, you don't want it to stagnate. That's the biggest thing. Because I do think we're in for a few years of state cuts until the economy kind of rebounds. Hopefully not, a prolonged period, but I could see it affecting us for FY22. I just don't see it going away next fiscal year either. So we'll keep looking at that mix. Statement of expenditures, we're at 77.4%. Again, once you factor in those July and August payrolls, we'll get closer to 100% there. And you can see last year we were at 80.1%. We're at 77.4. The biggest difference there is, if you think about it, Larry did the cash flow analysis is based on a trend analysis Larry had been doing for like 9 or 10 years of past numbers, but it doesn't factor in a pandemic. So, when we shut school down in March, of course, we've saved money March, April, May, which is why we're able to add back to the fund balance, which is covering our deficit that we're projecting for next fiscal year. So keeping that in mind, that we knew this percentage is going to be lower than last year. If it was higher, we'd probably be concerned because it should be lower because we don't have the same expenditures this year that we would have had in prior years. It's because we haven't run school for since the middle of March. So our transportation costs are going to be down. Our maintenance, our utility costs should be down. So all those, that 11 to 12% of the budget that's not payroll, we expected we'd have decreases in. Of course, our payroll is consistent because we've been able to maintain that throughout all of this. So the last one's always the one that kind of shows the true picture, the cash flow projection. You can see down at the bottom, the highlighted number is about 4.6 million. I fully, we'll continue to tweak this. I think we'll end up closer to 5 million. I just wasn't quite confident enough to put it in there just yet. But I think that's where we anticipate. And so you can see that on our expenditures, we're actually under budget about 4.5 million. And keep it in mind, we budgeted a deficit of about a little over 700,000. So we're actually about 5.2 ahead of where we thought we would be because we've got a positive 4.6 we're projecting. So the revenue side, we're up about $1 million. On the expenditure side, we're down about 4.5 million. And a lot of that's just the unanticipated pandemic that we had that, our expenditures are definitely down. So anyhow, everything looks positive on here. All this has been represented in the budget that was approved last night. Nothing here that is alarming at all. I mean, it's actually a very good, I think we were headed for a very good fiscal year, probably around the $3 million mark, probably, but with the pandemic, it's going to look even a little bit better just because we didn't have those expenditures toward the end of the month. But that'll help us going into next year because we don't know what that new normal is going to look like either. So, so I will, Mr. Worthy, you want me to go ahead and go over the supplemental and see if there's
Say that again, Chris.
I'm sorry.
Say that again.
Do you want me to go ahead and go over the next set of reports, or do we want to field questions on these and then go to that next set?
Just go ahead and go to the next set, and we'll ask questions later.
Okay. So next we have our supplemental reports. We just did our legal expenses and our board travel. No changes in board travel. I mean, we budgeted 18, we only spent 1,800 for the year. Of course, there hasn't been any travel in June either, just because since March, we hadn't really been able to travel anywhere. Legal expenses, we're at the 244,000 mark roughly. We budgeted 160. We increased the budget to about 200. So I was thinking about this today. If you look at the last few bills from Hall Booth Smith, I think that's the $14,000 to $15,000 range. It's probably what we need to try to hit next year, and that would get us to 190. You look back at September, and I know there's been different stuff going out through the year. We had a $35,000. I mean, those are what would make us go over. But if we can stick to that 15, 16,000 a month, that's kind of what we budgeted. We paid 3 different law firms this year. We don't anticipate hopefully having to do that next year. It'll be through Hall Booth Smith, the majority of it. And employment law solution, I know will probably carry over a little bit in the next year. Right now, I know Byron did a chart over to the side, which is very helpful. You can see, I know, Mr. Worthy, you've asked that question before. In the orange, we paid employment law solutions about $20,500 so far. We just processed one more invoice to them that was around $3,500. So we're right about $24,000 with them right now. So, but again, I think that's a good breakdown. Hopefully we won't have those $24,000 months again next year. Hopefully with some of that where it's more in line with 15 to 16 a month, which is what we've been running the last 3 months with Hall Booth Smith. So that's kind of where we would like to be. But I'll be happy, Mr. Worthy, on any of the financial reports to answer any questions.
I have one question. You mentioned the savings since we been really pretty much shut down since the month of March, and you mentioned the savings. Now, having said that, I can recall several years ago, I can't recall the exact year, I asked the question in terms how much it cost the district to open the doors every day. And it was somewhere between $500,000 to $600,000. And I'm assuming since you mentioned a saving on that, it's still pretty much the same.
Yes, sir. Of course, that 500 or 600 probably is mostly payroll because you can almost say 90% just to do easy math is payroll. So if you do that based on 500 or 600,000, you're looking at 100,000 maybe a day in operations, maybe not quite that much, and then you figure we didn't run school for about 60 days. So it's probably not quite that much, but we were anticipating increasing about 3.5 million. So now we're up to about 5 million. So I think the extra savings is probably in that 1.5 million range since we've stopped, shut down operations. But that's probably, the bulk of that cost to run, of course, is payroll. And, fortunately, we didn't have to, we even figured out with our bus drivers how to pay them an average wage for their field trips and trips they work. So, I think, we consulted with Mr. Pruitt on that, and Miss Duke did, and we were able to continue to pay our employees. So we didn't have any stoppage there, even on like some of the extra stuff like that. We figured out a way to continue to do that. So.
Okay. Now, moving into the next fiscal year, which is right around the corner next week, July 1st. Now, and you made it crystal clear that with the teachers, they won't see a raise in their paychecks until September. Now, that's the raise you're talking about would be the step raises. Am I correct on that?
Yes, sir. And that's if they're eligible for a step, because there are certain years, it skips either 1 year, 2 years. It's with a state salary scale. So if they're eligible for a step increase, that'll go into effect in September. Now our custodials will see that increase immediately because they're 12-month employees. So their pay runs from July to June, like myself and Byron's. We get paid from July to June. That's because we're year-round employees, where our teachers are 190-day employees. So our custodial staff will see that increase immediately in July. So.
And the same thing will hold true when you mentioned 12-month employees. The same thing will hold true for the 248-month employees. They will see that step raise in the 1st of July.
Yes, sir. That's correct.
Okay.
Yep. Yeah. And if you're, we have some, I think our principals are actually mostly on like an 11-month contract. So, they'll see it in August. one thing I learned when I got into this is we have the most amount of days and contracts I think I've ever seen. It's coming from a private industry background. We got paid once or twice a month, and everybody was just, paid 12 or 24 times a month. So when I got into this, it was trying to figure out like the different, like they're 190-day employee, they're a 210, 220. So yeah.
One other comment, Chris, because you had it on the screen a few minutes ago, board travel, and that didn't have any board travel this year, but I do recall that there were 2 board members scheduled to attend the NSBA conference in Chicago. Well, obviously that didn't happen, but they had paid that registration fee. And was that deducted from board travel?
I'll check on that. I knew like we were trying to get some of those registration fees refunded. I know we had a lot of stuff with, we use a travel group locally to do a lot of the, like for our employees when they're going to conferences, and we were trying to work through getting, and the airlines, unfortunately, were just giving credits, but we were able to get hotel rooms and stuff like that where prepayments have been made, refunded, and we were working on registrations. I'll check on that, Mr. Worthy.
Okay, now
I
what
think,
may happen
I think Lisa
there,
said that registration fees got refunded for NSBA.
Yeah, I think a lot of conferences were refunded. The only thing we really ran into were airlines, because what they want to do is issue a credit. And then of course the credit is in the employee's name, which is, that's good or bad if the employee leaves the district, but that was the only one we were really having. And I don't think we had a whole lot of that, but that was the kind of the stumbling block we ran into, was more with the airlines. So.
yeah, I was thinking different, that NSBA may have held on to the money because NSBA conference coming up again in 2021, which is scheduled to be held in New Orleans, but maybe not. It's pending on this pandemic and whatnot. That's why I was asking. Thank you, Chris.
Yeah, I'll double check with, before we have our next, I'll double check with Lisa. But yeah, I knew most everybody was kind of receptive on the registration. Like I said, it was just those airline fees, and I mean, I know myself personally, I had a trip booked, and I've got a credit now till 2022 with Southwest Airlines because I think they've expanded that where you don't have like 6 to 9 months anymore. They basically gave you almost 2 years to use it just because of the pandemic.
Okay.
And just while we're on this page, under board member travel, for some reason under the description, it says legal services or legal consulting.
Yeah, I just noticed that. I think, Byron, that's just board travel, correct? Or is that?
That's right. That's just a typo, Chris. I'll fix that.
Okay. No, I couldn't remember. I thought, yeah. So yeah, we'll get that fixed, Dr. Dykeman. I noticed it a while ago too. I was kind of like, but yeah, that's fine. I'm sorry. I missed that as well. So.
Okay, do we have any other questions, comments about the financial report?
The new format is fantastic. Appreciate it.
Yeah, Byron did a great job. Yeah.
I really like it too. So thank you very much.
It's much cleaner. It's got the, it's just, when Byron, we used to have that key performance indicators on a separate PDF. And when Byron came out with this, it was like, we might as well put them with the numbers they're going with and just have the graphs and charts below it. Oh, that's a great idea. So yeah.
Okay. Okay, do we have anything else? Do we have something under discussion for today, Chris?
Let me hold on a second, Mr. Ward. Let me get back. We had the paid invoices, which normally, for Fund 100 and Fund 150. I mean, y'all feel free to scroll through those. They're both Excel spreadsheets where you can sort them any way you want to. And if you got any questions, let myself or Byron know, and we'll be happy to answer them. I will tell you with Fund 150 that we're kind of going through we've kind of taken some feedback from our principals, and we're kind of revamping Fund 150 a little bit. So it's going to look a little different next year. And I'll wait and go through some of those details when we get into, next fiscal year. It's not going to affect the numbers any. We think it's going to be a better process for our principals. We've listened to the feedback. Byron reached out to the Georgia Department of Education, and we got some additional feedback from them. So we think we redesigned a better way that's going to make it much simpler for our principals, which is the goal of Fund 150 was to make stuff simpler. And I think it's made it more challenging for our principals to understand. So we're definitely trying to listen to them. And so we're going to revamp that, and we'll talk more about that in next fiscal year's finance committee meetings. And we can kind of give y'all a little bit better update. We're going to go over it with our principals more in detail in July at our executive staff retreat. And then after that, we'll definitely share it with the finance committee, how we're kind of revamping that.
So
Okay.
before we leave this, the supplemental report, I'm not comfortable that I remember this 9/11 2019 legal consulting for $1,450.
Yes, ma'am.
I don't know what that is.
Oh, okay.
I think that-
Byron, do you remember on that one?
I think that's what we were just talking about, Linda, that it's not actually legal consulting, it was actually travel. So they're going to fix the description.
So I'll go back and look and see where I was on 9/11, but yeah, that's $1,400. If that doesn't, it just right now, it's just not ringing a bell to me, but okay. Thank you. That would be really good.
I think
Ms. Davis,
Davis, we
that's
talked about LLC with finance committee meeting. I just can't remember what it's for. I don't know. Byron, do you remember?
I not off the top of my head, and I was just going to say it's definitely travel. I just picked up the wrong description.
Okay,
I'll be happy to look that up. I mean, it was paid off of the district's card. There should be a snapshot of it or an invoice attached. So
yeah, because I don't have the district card. That's something that Lisa would have had to sign.
Lisa would have paid on your behalf. That's correct.
Okay, life is good.
Yeah,
I'm sure we'll figure it out. If it's the GSBA conference where I went to the pre-conference, that shouldn't have been 1,400. It should have been 3 or something like that. So that's too much for whatever it is. But all right, we'll figure that out.
Yeah,
I'll be happy to investigate it and send you.
We'll send you. Yeah, Byron, we'll send you an email on that, Ms. Davis. Let you know
That'd
what
be
that's
great.
for.
Okay.
Okay. I think, Mr. Worthy, the only other besides the Ms. Davis had mentioned when we presented the audit at the board meeting, I guess back in, I don't know, we've had so many meetings that back
We
in,
have.
and I think you said you might have some questions, and
I
so-
do, and they're not hard questions. So if we've got a minute, I can run through it real quickly.
Yes, ma'am.
But in that report, and I tried to find it last night or night before, and I got distracted. There was a 2,017,135 $135.13 something. It was a SPOS receivable. That's what it was, and it was under. Was that under the government? It was unrecorded SPOS receivable of
I'll
2
be happy to
million.
do that, Chris.
Does that
Yeah, go ahead,
ring a
Byron.
bell?
Okay, so at the end of the year, we go in and we record receivables for any revenue that's attributable to the prior year, and that should be recorded at 6/30. And so for the vast majority of all receivables, we got it spot on. And last year was my first year with the district, and I skipped over the receivable for SPLOST. So the SPLOST receipts that are attributable to June but received in July, I booked it straight to July rather than saying, hey, that was attributable back to June. We need to book that at 6/30. So auditors picked that up and they booked it and made a correction.
Okay.
We're not missing any of the money or anything like that. It was just booked to the wrong period, and the auditors
Yeah.
fixed it.
I'm glad you're able to find that quickly. The other question that I had was under, I don't know what the question was, funds held for others. What does that mean?
Okay, fund, and this is going to change drastically this upcoming year.
Mhm.
GASB statement that redefines how we classify funds that are held as for clubs. Basically, this is, we act as kind of like a bank for clubs throughout the district, and so funds held for others, it's funds that are held in our banks but aren't necessarily our funds. So they want to keep those accounted for separately. Going forward, though, for FY21, they kind of revamped everything. So now they're saying for the vast majority of all clubs, as long as you have administrative control over those funds, those are really should be reported as the school district funds. And so that's going away, and they're all going to be reported as governmental.
And so the clubs being things like athletic association, what does that mean? That's what I'm trying to get a sense of.
Like 4-H club.
Okay, things like that.
Yeah.
Little monies. All right. Then there was another, well, this one is for policy. So when we have an overpayment, and I don't remember exactly where it was, it might have been somewhere around federal personnel charges, somewhere in there. I made a note, overpayment, it was once we collect that overpayment, how is that distributed or tracked back into the accounting process?
Okay, so what happened there was, I think there was a district or there was an employee that was overpaid, and they happened to be a federally funded employee.
Okay.
And so, once we figured it out, HR went in and recalculated their salary,
Okay.
fixed it, and I think it was in January. So the first 6 months or 4 months of their contract, they were overpaid. HR fixed it, but we didn't go back and recoup the money. So the auditors picked up on that, and they said, okay, this employee was overpaid. It's an unallowable expense per federal guidelines. And so really what you need to do now that the year's closed is turn around and write a check back to GDOE, because the overpayment is not an allowable expense. We receive money from GDOE, through federal funds to pay that. We really need to pay that back. So that overpayment, it just needs to be covered by general funds as opposed to federal funds.
Okay, and so then how would we track that?
In terms of recouping those funds,
Yes.
it,
I mean, did we then take the money back from the employee, or did we just pay them out of the wrong bucket?
as long as they are a current employee. And it is, we went in and we updated our accounting manual to describe specific steps that need to be taken when employees are overpaid. And if they are I think I reached out to a couple larger districts and said, hey, do you have a policy in place? What do you guys do when you overpay employees? And I think I reached Gwinnett, and they provided me with what they do, and I incorporated that into our accounting manual. And I think depending on the dollar amount, we really try to recoup it as quickly as possible. If it's more significant, or it's hard to determine what might be significant to someone that works in school food might be different than what's significant to myself or Chris. So it's really a kind of a judgment call of how many months we recoup those funds over.
Right. But I guess my question is, how are we tracking that? They picked this up from the audit, right? And so when is there some special code that you use to track that you're collecting an overpayment, and how do we know when it's resolved?
So whenever we pick that up, it gets communicated to payroll. Our payroll supervisor, she's got a code that she uses to recoup money from the employees. It basically just reimburse the district, and separates it out over however many months it's going to be, and then she sets it up to say, okay, it's 1 month or 2 months or 3 months, and then once that time period is done, Munis automatically shuts off that amount that's being recouped from the employee's paycheck. And
so that's coded as income to the district, or is that recovered money from the district? How does
it would, I guess it would, since it would have already been expended, it would just reduce the expenses in the current period, so it wouldn't show up as an expense. So, for instance, if we would have paid somebody $100, but recouping 10, it would only show up as an expense of $90 in the current period, because we already overpaid them $10 in a previous period. So to the district, when it's all said and done, the expenses are accurate and nothing ever hits revenue.
Yeah, I can see where that's a HR nightmare. When somebody
Yeah.
starts asking about their paycheck 6 months later, you know. So, all right, that was part of my concern when I read that. And then also under, I think this was on the that was probably page 2 of 2 on the schedule of observations that I read that. I see a note here now in March, I believe. And then my last question, and I don't want to keep this call any longer than we have to. Fiduciary funds. My question is, can these be directed to a 501c3 for CCSD to make contributions tax deductible? And I don't know why I asked that question. It's been a minute now, but okay. I have that question, and the other note that I have is CCSD is, what are we, a trusted agent? Is that what it said?
Okay, so that you're talking about the agency fund?
Yeah, the agency part of this, yeah.
And that's specifically reporting on club balances. So those
Okay.
funds are held at the school level by clubs. So I'm not sure I understand your question about.
Maybe it was just me understanding that the fiduciary, I think somewhere it said fiduciary, that CCSD is a trusted agent for the benefit of others in that one. And that's the definition of fiduciary funds. Is that what maybe that's the question I'm asking.
That's exactly
Yeah.
right. So we act as the fiduciary. We're holding on to those funds for those clubs. So we're saying, hey, these aren't the district's funds, even though they're in our bank account. We want to report them separately.
Okay. And so we continue to track those separately, and they can't get sucked into or pulled into the general funds. Is that correct?
Yes, ma'am.
Okay, that's the main thing, is I wanted to make sure that there was that clean separation. So is that does that also qualify that to be a part of the 501c3 tax deductible funds that we can collect?
It's still all under the school district's EIN number.
Okay.
And
So
so
the school district itself is tax exempt under section 115 as a governmental organization rather than 501c3. But to answer the other part of your question, and we may have had this before, no, the district cannot donate money to, private charitable organizations. We have taxpayer money, and we're not allowed to donate it. We're only allowed to spend it for educational purposes.
So I wasn't interested in donating. I was interested in receiving.
And we can receive money, and people can deduct their contributions to the Clark County School District because we're 115 tax exempt. Same
Okay,
effect
great.
as 501c3.
So 115 tax exempt is who we are.
Yeah, Ms. Davis, I know Mr. Hamill had done this, and I've done it in the past. Almost all districts at some point, because a lot of our schools will apply for grants, and they ask for, a 990 and a 501c3 letter, and so we get a letter from the IRS, and it's exactly what Mr. Pruitt just described. They won't per se. They kind of define us as one of those entities out there, like we're governmental, but we're not a 501c3. So they won't ever, their letter's always kind of real vague. So but yeah, it's like Mr. Pruitt said. I mean, we are exempt, but so we use that letter for our schools when they apply for a grant, because most grants are set up where they're getting a 990 from a 501c3. Now, we do have a few accounts that we don't have any control over, because they're in the name of the school district that the Athens Area Community Foundation has, and of course it is a 501c3. So over the years, and when I say a few accounts, it's really not large dollar amounts. Sarah McKinney, who's the executive director, and I plan to meet back in March to go over these, and we played phone tag this week just to figure out what's still out there and what that money was originally designated for. But people have donated over the years to the community foundation for the school district. Now that is a true 501c3, but normally that money has restrictions on it on what it can be used for. So, of course, because they get a letter from whoever's donated it saying, I want it to go towards this. And there's not a whole lot of money sitting out there. It's just getting your head wrapped around what's there and what was it originally intended for. So.
Well, what triggered that thought, of course, is I did go to that legal training for GSBA, and they talked a lot. Phil Hartley especially talked a lot about the athletic association and the funds that people go into that, and how the school somehow was responsible for that, or monies that they spent in our district. And I'm like, we don't see that money. We're not stewards of that money. So I'm not sure how we can be held accountable. And I think it may have even been in relationship to Title IX, something that
It is,
came out
Ms.
about that.
Davis. It is. So that's a problem at the college level, probably more so than the high school level, but us too. When private donors, and this is money that, may never be under our control. If, private donors just give equipment to the football team, or there's a separate 501c3 that doesn't operate under our tax ID number, but they contribute, from the Department of Justice's standpoint and the EEOC standpoint, we got to equalize under Title IX. Doesn't matter what the source of it is. We got to make sure that, we meet Title IX requirements on gender neutrality for our provisions and opportunities. So yeah, I think that's what Phil was talking about.
Okay, and so that was one of my, well, again, sitting in the training, you always wonder, who's going to be the parent that brings that to us as a concern, and have we thought about how we're going to handle that or how we respond to that? But that's what drove that question. That's the end of my questions that I wrote down on my little notepad. So thank you very much.
Okay.
That's, Mr. Worley, that's all I had for reports. I think the next item was just setting the next finance committee meeting, unless anybody else had any questions.
That's correct. We're down to the next finance committee meeting. You have a calendar before you, Chris?
Yeah, and I'm trying to think, I don't know, and Byron, you may remember, does the finance committee normally meet, say, in July and August? Because we won't have our final fiscal year 20 statements till September. So we really don't go over June until we finalize that, I believe, is my understanding. So I don't know, unless there's just something that pops up in July and August, that there's a need to meet. But Byron, do you remember how Larry used to do that?
It's either September or October, depending on when those financials are ready. And I think September is almost too premature, even for June financials, just because we're wrapping up with those all the payroll accruals and backing them up and closing out the year. And we typically don't completely close out the fiscal year until early September. So I think maybe what happened last year is I closed out in early September. I generated those final set of financial statements for the board. And I think maybe later on in September, I shared those with the finance committee. And then in October, we kind of skipped over the first couple months of FY20, and we just went straight to the financials from September, I believe.
Yeah, that's kind of what I've seen happen in the past. If that's all right with you, Mr. Worthy, we may just try to schedule a meeting, maybe get back on the Thursday routine in September, if that's all right. Unless something pops up between there and we need to meet, and I can reach out to you.
Okay, that's fine. You can just send out an email to all of the members of the finance committee, and we normally place that on the excuse me, the website for all board members that'll be interested in attending. So that's fine, Chris. Just send us an email on that when we're planning to meet in September.
Okay. And I'll work with Lisa on getting it on the website. I'll make sure we don't have anything out there for July and August, and we'll get those off. Because I think what happens with that calendar is it kind of keeps rolling over. So Lisa and I a couple of times have gotten out there on Monday or Tuesday and go, oh, the meeting's still on the calendar. We need to get it off. So I'll get with her, Mr. Worthy, and we'll work on that calendar.
Yeah, you're correct. It rolls over because I saw a work session and also a board meeting on there normally for July. And normally we don't meet in July. Right.
I mentioned that to Lisa the other day, and I think she was going to tell you. I know she's had so much stuff going on. I don't know if she got the work session. She says she was going to get it off the calendar.
It was still on there yesterday, but I'm quite sure that would be corrected.
Yeah, okay. I told Lisa, I said, I don't think we have a work session in July. And she said,
It's
oh,
no, we don't.
She must have taken it off. It's not on there right now.
It's not
Okay,
on there.
good,
Okay,
good.
good. Okay.
Yeah,
all
we
right.
talked about that because I said, I don't think and she said, oh no, she didn't realize. Apparently our calendar shows up in like 2 or 3 different places and she'd taken it off a couple, but it wasn't taken off the main page. So
Yeah, I think you're correct. Okay, if we don't have anything else, I'll entertain a motion for adjournment.
I just have one more question. So the minutes that we approved today were from February. Do we have any more outstanding minutes?
no, ma'am.
Yeah, because we
Okay,
have a
so we
met.
last met in February?
Yeah,
We
we
have a
didn't meet.
mess.
Yeah, because March would have been right when the pandemic set in, Miss Davis, and then I think we
Uh-huh.
kept pushing back because we really didn't have anything pressing. So yeah.
Okay,
And we've just done our other financials at the regular board meeting, Ms. Davis.
so I would like to have that reflected in the minutes of this meeting so that, we won't be looking for the rest of the minutes if we happen to forget about COVID and what its impact has been.
Yeah, that's a great idea. When I do the minutes for this one, we'll make sure that March, April, and May are noted as we did not meet for those months due to the pandemic. And I'll put in there that the financial at the board meeting as normal.
That'd be great. Thank you.
Yes, ma'am. Thank you for pointing that out.
Okay, a motion to adjourn.
I move that we adjourn.
Moved
Second,
by Linda. Got a second?
second.
Second by Kara.
Yeah.
All in favor? Yay.
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 Okay, meeting
All right.
adjourned. Thank you very
Thank
much.
y'all.
Thank you.
Have a good
Weekend.
Thank you.
weekend.